is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 17th day of December. Now we can say we're past the halfway point. Very important. We're looking at the E-mini, which plunged this morning again after Friday's big slide. It went all the way down to 2567.75. I'm just talking about the December one. I'll change probably tomorrow. I'll change over to the other one. And we've run up to a peak E, and we made a beautiful left side, right side price time match. Took it out on the other side here at 11:04 Eastern time. We went to 2597.50, pulled back to the 2589 area, and now we're trying again to push. And whether we break above this is going to be important. The 10-minute chart says it should go to a leg C. The 5-minute chart, that was a 2-minute chart. The 5-minute chart went to a peak D, hit the 200. These moving averages are just, if you're able to use them and you appreciate what they do, they are such nice indicators just to give you some sense of, it's like a little life buoy. You're looking at it and you say, oh, there it is. We don't have to worry about it. As you get closer, so you've got to maneuver around it or bump against it. So this is what we're looking at. That 2600 is important. If a little later on during my show we get to 2606, 6-7 points above here, that's going to be really important because it breaks out in the 10-minute chart to a leg C, and it makes the 2609.60 area. Well, the futures will be 50. 200-period moving average, the next upside target. Now, let me get to the nitty-gritties. I can't believe how much time I spent over the weekend actually all the way through last week, going into the weekend, saying to myself, I don't want to have to give an intraday update on a turn in the market. A couple of things are going on. One is it is such an important moment that I think there could be another one of those A low, not the low, and it could be a pretty tradable low, because if we can survive a very sharp pullback, my thinking was that if we could survive a very sharp pullback early this morning, that's Monday morning, rally quite sharply off the low, with all that's going on, with the uncertainty of this week, with the government shutdown possibly, I don't think it's going to happen, but you never know. With the Fed making an announcement, you never know. Maybe if we can survive a low today or tomorrow, by Friday we'll be looking back and say, phew, everything just kind of worked out. Otherwise, we will obviously be retesting those lows. So with that in mind, I said to subscribers, we want to be buying this morning on a sharp pullback, and we wanted to be buying under last week's lows in certain indexes. And if we get it, we'll just deal with it with a kind of a wide, for us, a kind of a wide-ish stop, still only 1%, but a kind of a wide-ish stop for the moment. So we're now long. We are long the Dow. And I don't even know how long it's going to last. But I think we got in at a propitious moment, a moment that said, so much bad news over the weekend was prevalent, just everywhere you looked, that there was just a really good chance that we start the oversold rally at one of the many center rallies right now, and at least it gives a little bit of a cushion. I'm really upset because the other one that we wanted, we missed by fractions. I literally mean fractions on a 3 times long ETF, which was down pretty sharply, and now from Friday's close, not from this morning's low, but just from Friday's close, is up 0.86. But actually from Friday to this morning, it's about almost, we wanted it at 41. Let me just tell you what we wanted this particular little sucker at. We wanted at 40.17 and at 41 point, I think it was 41.06. We missed about like 36 cents. And now it's trading at 43.23. I mean, that's how quickly these things move. Hey, I'm not panicking. There'll be plenty of time. I'm sure we'll get it. Maybe we'll get it at a higher price. Maybe we'll get a lower price. But that was the opportunity. I tried to work it out as closely as I could. I didn't want to have any updates, anything. I just wanted to do my morning call that goes out. And that was it. With all those charts that I sent out over the weekend together, it's enough. So that's the best you can do. And it is leg 7 in the daily chart. I'll get to all the indicators, all the indexes in a moment. But it became a Chapman Wave 5 potential in the daily, in a leg F. You see this chart on the right here. This is the 120-minute. The one on the left is the daily. One on the right is the 120-minute. Look how many support levels we've got, all the way down to 23,754 and then 23,694, and the low was 24,088. So there's a lot of support. If that just smashes through there, that is really bad news. So all I'm looking at is this week, we've got huge support levels. Hey, maybe they'll hold, maybe they won't, but we'll see. That was the best opportunity. Okay, there we go. The Dow is down 57. It had a low today of 24,088. That's below. That is below the 24,088. Can't be below the 24,284 low of the 7th. I'm sorry, the 24,000. No, it was 23,881 level. Well, why am I saying that incorrectly? 23,785. I'm saying to myself, nothing makes sense about what I'm saying here. The low today is 23,785. I was reading the high, sorry. It was a very long weekend with all these charts that I was studying. All right, so we're nicely off the low, but let me tell you, these rectangles on the weekly chart still make me somewhat nervous. All right, here we go. S&P, SPX.X. The S&P right now is down only 4.5 at 25.95. It made a low this morning of 25.67.44. 25.67.44 is below the low that was made on the 10th of December, 25.83. So let me just show, that was over there. That's what it was. I just moved it away. 25.67. Let me just change it so I don't keep talking about the wrong thing here. 25.67.44. 67.44. I got it right here. And we've gone to a leg F to the downside in the Chapman wave. QQQ. Trading at 161.26. It made a low this morning of 158.64. Now this made a lower low than the 10th, but not anywhere close to the 157.13 low. I shouldn't say not even close. That's kind of close, 158.64. Reasonably close to the low of the 13th, but in an arch formation, if it starts a rally here, you could finally get a head and shoulders bottom, but I don't like those patterns until they prove themselves, and by the time they prove themselves, you never know. I was asked if I could look at the comp. I wonder if I've still got my comp all notated here before we go to the break. Yep, the comp has made a peak E way back in, I think, October 1st, something like that, and it made a lower low this morning. The comp went down to 6808.72. It's trading at 6913 right now. Not a pattern at all. Not nearly as good as the NDX. I'll be back. Basil Chapman, Tiger News, Downtown 8.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. Basil Chapman, Tiger Traditions down. Dow's down 65. S&P's down 5 3/4. Comp indexes, I missed that. I shouldn't have said it because I haven't got it in front of me. I've got it right there. Up 2.60, 2.30 at 69.12. And we're going to go to our first caller. We've got John in Philly. John, how are you?
Basil, I'm very good. Hope you're doing the same, and thanks for taking the call.
My pleasure.
Basil, I wanted to ask you, please, about what you've described as a coda phase. Just by way of review real quickly, back in 15 and 16, as the market had topped and then pulled back, you spoke very regularly about your expectation that another rally phase, a coda phase, would take place.
Correct.
My very specific question for you here and now is this. Can you articulate, or I'm asking you, if it's possible for you to articulate the things that you see that would support the idea that the coda phase is in, has topped, and now we're doing something much different, and the factors that suggest the coda phase is not yet over. I'd like to just ask if you could articulate those factors that support both possibilities. Be very helpful to me.
Okay, very good. I was actually just looking here. I got a lovely email from a listener over in the United Kingdom asking pretty much the very same question that you just asked. I'm just trying to see it because it was, I will find it. There it is. I've got it. Okay. So let me just click on this, and I'm going to place it somewhere over here so that I can see it. And the thinking is this. If you look at this New York Stock Exchange Composite Index that I've got up here, is on the left is the daily, in the middle is the weekly chart, and on the right is the monthly. If you look at the monthly chart, this is the very broad New York Stock Exchange, over 2,000 stocks. 13,635 was the high in January. It came down very sharply, rallied right to the 14-period moving average in the monthly, rallied sharply to a single leg A underneath the previous high, and then made that arch formation I always talk about. I call the lowercase h, and then it comes tumbling down, breaks the left side support of February, but rallies back up again. And then this month, needless to say, is an ugly month, and it's gone to a leg C in the monthly chart. The MACD is very weak. Stochastic is very weak. I've got a left side, right side price time match, which comes to this month on the very shortest that it could ever be. I'm not sure it's going to do that with 11,400 to 11,300 as a possible test. If it doesn't actually do that, but rallies instead, it extends that out. Now, the reason why I wanted to bring that up, because it's I could give you other instances, but the January top in the Dow was 26,616. It went to a higher rebound when it went to the October high of 26,951. Apple has matched very much the pattern in the Dow. Now, Apple is a pretty, I'm going to talk about it in a kind of a macro sense, as if it was like the old General Motors of the 1920s that was really surrounded itself with all the technology and everything that you could think of for that particular period and produced cars in the leading fashion, even though Ford had the greatest number. But Apple is right there in high tech in this particular age. The reason why I bring it up is because I wanted to just point to a couple of technical things as well as socio-political, because this Apple also is in a sense a political thing because it goes into China, and it is also a technological issue as well as the technical chart of the Apple itself in the monthly. Now I've got that out of the way. Let me go back to the New York Stock Exchange, and now I can cover a bunch of things. So the question was, and it comes slightly different to what you're asking, and it was, hi Basil, I watch your show from the United Kingdom when possible. Very impressed with your show and your Chapman Wave. I invest only in United Kingdom equities, not professionally, but when I have the time for my pension plan, which in the United Kingdom may self-invest. I remember a while back you were suggesting higher prices for U.S. equities in 2019 with your coda phase. Such prices will be accompanied by such things as construction of world's tallest building, other indication of largesse and opulence. With the weakness we have seen, do you still feel this is the case, or do articles such as the link above, and that the link above is really interesting. It has, I showed it to subscribers over the weekend. I actually took that same link. It says China dominates skyscraper construction. Now I'm going to go introduce you to, I hope this is a little bit of a roundabout, but we are at such a particular point. I think taking a little time, at least for me, to explain what I'm looking at makes sense. Now, the FXI, which is the China big cap 25, it's called, made its high, a round number high, January of this year at 54.00 in a huge big cap ETF, round number high, all-time high. It's amazing. Peak E in the Chapman Wave, and it came down all the way to a low around about 37 in October, and it's trying to bounce, and you can see this huge cup formation. So I'm trying to introduce you to areas that I'm looking at, and now I'm going to add something else. I over the last month, I've been going right back. I've been reading all my 1929 books. I've been going through, I got a fabulous book. I can't even remember what the name is right now, and it's got the history of the United States it's capsulized, and it has all these different segments, and it has all the different years, and it has what happened economically, what happened politically, what happened historically, etc. And it's really very, very interesting. In the break, I'll try to find the name of the book, because it's just great to have. I'm looking at this, and I think that there is a chance, and I'm now thinking it's a greater chance than a lesser chance, that sometime in the first quarter, I don't think we're ready for it yet. I think we've got to go through until Trump can figure out how to minimize the Democrats' just constant pushing of impeachment, which I think they will let go at a certain point, but they're going to do that. And until the Republicans are able to congeal, just get some thoughts together to be able to work on the programs that would benefit the stock market. Now we're talking stock market. I'm not going to go politically. I'm just talking stock market. Best, I think that if you look at the China FXI index, at this particular point, it isn't so bad that China has to say, oh my God, we love to look at the long term. We only do things in the long term, but we better be looking at this a little differently. I think they need about another couple of months to be able to decide that, you know what, if something like the FXI goes under 28, the February low of 2016, it's going to be really difficult. And I think they're going to be a lot more accommodating than they've ever been before. And I think it's going to suit the stock market here. That's number one. Interest rates, I think, for at least the next 3 months or so are not going to be an issue. I think they're going to start to garner strength later in the year. So my answer to you is, I haven't changed. I have to look at the timing a lot closer, but I haven't changed my view that we are going to still have actually, there's a lot more I wanted to talk about. I don't know if you want to hold on, John. If you want to go back into the den and listen, that's fine. Otherwise, hold on if you've got questions. But I'll cover this in the next segment. So here we go. We've got a break coming up. Dow's down 94. We'll be right back, maybe with John.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. Dow's down 92, S&P's down 10. So this is the book right here, Timetable of American History. It's by Lawrence Erdang, editor. It's an old book. I don't even remember where I got it. Let's just see when it was published. It must have been published in 2000 and something. Oh, forward update, 1996. That's an old book, but I've had it for ages, and I just love it because look what it does. It's got one column has history and politics, America and elsewhere. Another one has the arts, America and elsewhere, science and technology, America and elsewhere, miscellaneous, America elsewhere, and this goes down every single column, year by not year by year, but year by year, but not monthly. So in other words, it'll give you 1, 2, 3, 4, 5, 6, the facts. So I love this book. And I've got a couple of others like it, and I use it all the time just to keep getting perspective. You know, that's why I was saying just last week, I said, you know, we talk about the women's movement. Good grief. 1880s, 1920s, the late 1940s, when women were working in factories to be able to help out because the men were at war. In 1960s, it repeats over and over and over again. So I like to get that perspective. So what's really important about it is now I'm looking at markets, and markets do the same sort of thing. Let's just go back to the FXI. Look at this beautiful pattern of left side, right side price time match, and it goes like the Dow. It went just above the previous high of 52.85 back in April of 2015, goes all the way under the 200-period moving average to 28.10, February of 2016, whoops, and it has that same insight. This is the thing that I recognize, and I'm so upset we didn't trade it as well as I should have for the last rally going to the October high, because it had that inside wedge that I was talking about that goes to just at or just above the previous high in the rectangle and cup formation, and then finally how it closes. If it cannot close above the previous high, that's really important. So 52.85 was the high, and this closed at 52.67, 18 cents below after 3 years of plunging almost 40-something%, and then coming back again. So yeah, I like to look at these things. Now, let's get back to our story. Okay, so this is what I'm looking at. In the very big picture, if I go to this chart, I didn't show it to my subscribers this weekend because we just had so many other charts to look at. This particular chart right here, Dow monthly chart, if you see how I drew the green line, that came all the way from 1987, from the crash of 87, from the low, all the way to the highs of 2000. It's completely skipped the 2007 high, but it went all the way to the recent highs right there. That, I mean, 1987, the low of, what was it, 1661? No, yeah, 1616, back in October of 1987. Yeah, so now we've got this congestion area. When this congestion area is completed, my thinking is that we'll be ready to start a move. Now, how long it takes is going to be very interesting. There's some things I don't want to talk about now. To the back of my mind is not my mouth. So I need to think it through before I articulate it, because I know some people, it could add to their anxiety, it could add to their euphoria, it could add to something. I don't want it to have anything to do with it. It is only an idea that percolates at the back of my mind. Suddenly it moves forward, and it'll come to the forefront at some point if this mind actually is still doing its job. So let's look at what we got now. We've got a Chapman Wave 5, a leg F to the downside. If we take out today's low in the next two or 3 days, it better just be fractional with all those key supports that you've got right here. Otherwise, there's a real problem. My thinking is we've got another arch formation, and we've got so many resistance levels between 24,400, the 9-period moving average in the Dow, the 14-period of 24,600, and then 24,740 to overcome. That there's going to have to be really clear good news to do that. It can't just be an oversold bounce to sustain that rally. So I think we've got a lot of work to do. I think the next, I think late January, maybe early February, that's when I think we get the big test. But nothing compares to the test of 23,300 on the Dow. A close below that means one thing, and not even getting there or a really big bounce of 23,300s makes it absolutely imperative that we look at the market in one way. Breaking under says you've got to look at, and believe me, I have subscribers in a very heavy cash position. There are so many stocks that are beginning to look very attractive. We'll have lots to buy. We'll put in fairly tight stops as usual. All I'm saying is that this is a period where I don't think you have to suddenly rush out and pour all your money in the market. You'll have plenty of time. When we turn around, there'll be an initial spiral to the upside, and then we'll come back and probably start a stair-step move in disbelief going all the way. I just don't think there's enough disbelief right now in the longer term. In the shorter term, people are very worried, not sure what to do, but I'm not sure they're really moving money out. Yes, the mutual funds have all been getting a tremendous amount of money, the greatest amount of money that they've been getting in the last 7 or 8 years, maybe 5 or 6 years. And that's something that says, hey, that money is going to be put to work one day and on the upside. That's what I'm looking at. Doesn't mean to say we're making lows right now. I'm looking for a trading low. That's all there is. And I believe if we miss, we'll have another chance. There's nothing. I don't want to be chasing at this stage. Okay. So now let's go back to the story. As we do them, I'll tell you what I'm looking at in the S&P. The S&P right now is down 19. It had a nice bounce. Now it's back down 19. Leg F. That month, the weekly charts in the Dow, the S&P, the Qs that the QQQ we looked at before, all of the weekly charts suggest a lot more work needs to be done, and the 2553.80 low that was made back, is that the low? 24. Oh, sorry, this is February. The February low of this year is 25,032 for the S&P. That's a long way to go, 50 points lower. So I don't think we're done. And the monthly charts of all of them are suggesting there's more work to be done. Now, it makes it really kind of dubious to listen to someone say, wait a minute, we're going to go into much higher highs. I believe we will go to much higher highs. The part that really is an issue for me is how does it fit in with the president's term right now? How does it fit in with my thinking of what happens after that? And how does it fit in my thinking initially? And I'm still in that camp to say, regardless of what happens, this is going to be a one-term president. I don't know why you would want it for a second term, unless the market is just screaming to the upside. Ego would let him do that. But I suspect he's going to hand it over, and we'd be looking like a Coolidge-type baton handover for the next phase. But let's just go there when the time comes. In the meantime, back at the ranch, I haven't touched gold, I haven't touched the dollar. We're running a little late on this segment. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's down 170. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So just need to quickly I realized that I didn't cap off what I wanted to talk about when John asked me the question. I'm going to add this one thing that I think is really important, and this is the thing that could have me having, what is the expression, egg on your face or whatever it is. This could be the most embarrassing thing. But I don't believe that we made the top in October in the Dow. I mean, all the indices, but the Dow was the one that made its top in October. The S&P made it in September. I don't believe that we make, after a 9-year bull market, almost 10 years, that without recently, I think it was last week, I was at the gym and I counted them. There were 3, it was during the week. And this is not the place I usually go to early in the morning. This is where I go to play tennis. Went through the gym because that's how we go into the courts, indoor courts. And I counted, from what I could see, 3 CNBC, and that was when the market was down pretty sharply. Now, why was I there? I don't understand it. During the day? Anyway, but that's what it was. The market was down quite sharply, and there were 3, I know what it was. It was after the market closed, but there was still the screens were still showing what was on, and it had CNBC, 3 of them I could see. And I understood it because of the market conditions. That isn't normal. However I go, there used to be one I could see the monitors as I was driving by because the windows were open. I would always look at the monitors quickly to see. And I have to tell you, very few people even talk about the stock market. When in my history have I ever come across major market tops without the general public? And I think we're 1 year ago exactly, thank you, who was in Ruby in the Den. High on Coinbase reached 19,891. It was 1 year ago today that the price of Bitcoin peaked at 19,891. 5 days later, the price tumbled to 10,400. The next high on January the 7th reached 16,841 before the price tumbled to the February low of 5,873. And of course, today it's even much, much lower. And I remember talking about it right here on the show in December. And then I spoke about it the very first trading day of January. I said, wow. And then I told the story about this person who had said, I'm not missing out this time. I missed out on the high techs. I missed out on and named different major home builders. I'm not missing out this time. And I've bought anyway, I said to him, just be a little careful, but I've not even spoken to him. I've seen him once since then, even though he's a neighbor. We don't see our neighbors too much around here. So I hope he's done what he's had to do. But that was the major top. So I just don't see it. That's a really big part of the whole coda phase. But the other one is the skyscrapers. China had don't have it in front of me now. I had it. China had, oh, there it is. So out of, I had it, I gave it to subscribers. Where did I put it? Here it is. No, that's not it. All right, well, it was something like out of, China had 88 or something out of 140, I think it was 124 major sky built over 600 feet high. Skyscrapers built in 2018. China had the majority, and you saw what happened to the FXI. Look at this. Look at CRM. I'm all over the show today. I have to be because my mind is moving in that direction. CRM is Salesforce.com. New building opens up January of this year. It waited until October to make its all-time high at 181.19, plunges down to 113, trading now at 133 after bouncing just recently to the 140s, 146, and now it's at 133 until Salesforce has a little bit more, in maybe another 2 months or so of consolidating. I think it's telling us, hey, we just did exactly the same as the FXI. We built our big building to show off, and I love the building. I must say, I've only seen pictures, but that's your cloud right there, and I think I'm going to be watching this one very closely. All right, back to our story. IWM, what a day today, huh? IWM trading at this particular point at 139. It goes from 173 to 139 this morning. It's about a 19% or more decline. Leg C, my target was 137.60s, the 200-period moving average in the weeklies. It is almost there. It made a low today of 138.11, 137.60s. Yeah, it's almost there. But it has broken key support in the monthly chart. I have to tell you, I would not be in a rush to get into too many equities at this point. There will be some real good bargains, I believe so. And trading bargains, you can get, I think we can start looking this week for trading bargains, but major buys, I think we have to wait. Okay, let's go to gold. Gold right now is up about 4, I think. Up 8. Oh, big move. So this is a very important move. It's up 8 points at 12.49. The reason why I'm saying it's important is silver. Let's see what. So this is 0.67%. Silver is up 0.70% at 14.74. Still lagging. This week, I said to subscribers, and in an interview I did Thursday, I believe it was for Financial Sense. If you go to their site, you'll be able to hear it. I'd say this is really an important moment for oil, yields, the market, the dollar, silver, and gold, because there's a chance that this is the week, if things really get bad, and if the XLF, I'm all over the show, but I have to be, if the XLF plunges further, wow, it's down, now it's up a penny, but it went to 24.02 this morning, getting closer and closer to 23.64, the 200-period moving average weekly support. So if the financials have a bigger dip this week, then I think you're going to see money go into the gold as a safety factor. And then if gold starts to trade at 12.68 to 12.72 and can hold above 12, I'd say 12.60 for an entire week and a half or 2 weeks, and treats the 12.50s as 200-period moving average bounce trampoline support, we're going to be looking at something very interesting, because for the first time, the dollar could become vulnerable. It's still holding really well. It's only down 29 cents at 97.16. I've got it as a G/C in the daily, a D in the weekly. Finally, Friday, it made that leg D and a leg B in the monthly. And the monthly technicals are still very strong. So this is going to be very important. Let's look at the EUR-USD. Oh, I'm running late there. Euro-dollar currency pair, upper fraction, was stuck in a range. Let's look at the USD-JPY, USD-JPY. This is the yen, dollar-yen currency pair, down 0.55. Yeah, that's unbelievable. This Chapman wave repellent zone. Remember, there's an inside track, a technique that I developed. Look at that, it's repelled the price every time, bam, 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 down. And then the weekly chart is just stuck in a range. It hasn't broken down, hasn't broken out. So a lot can happen this week. Let's look at crude oil. Crude oil is right now trading. I've got a bunch of questions coming in. I'll try to get to them. Crude oil, down again, down 79 cents. It is just is not a great. I'm going to get rid of this because it isn't an oval pattern anymore. Oh, wait a minute. Oh, it is an oval pattern. It says one more pullback is possible below 49.41. All right, so there it is. I've got the inverted Chapman wave stork leg formation. And just as we're about to go, I had a question, not a question, a statement about yields. Why don't any of you talk about the yields, the inversion? And all I can say is I've been talking about it for months. I don't know why I have to keep talking about it.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Yes, so a couple of things. So let's see. The question was, well, it was a statement. Why does nobody talk about this, about the inverted yield curve, about this? It's because they all know it's key to the markets, and I guess you're part of it too. Never take the hand away that feeds you. Okay. I don't even know what that means, because what do I have to do? I have nothing to do with it. I'm merely the informant. I'm telling you what's going on that I'm looking at, but decisions are not up to me, believe me. So I had a question about ABX. Yeah, ABX making a cup and handle, not one of my favorites, because the pattern says that if it pops up, it usually comes back and retests. If you get it right, now at 13.57, I believe this person has calls. Yeah, this is the best way to play it with calls. I think that works very well. The other is, so yeah, the yield curve, I don't want to take too much time now. We're about to wrap up. So as we're about to wrap up, I'm just going to say, let me just get this right. Just forgot to say that. Got it out there. Okay. Yeah, the TLT is holding. Look, the 200-period moving average of 118.29. And this is saying to me, I think for the first time, we're starting to see money come out of stocks, go into fixed income, but also go into the iShares Treasury bond ETF and bond funds. I think this is what I'm looking at. I've been talking about it for a while, saying when the market really starts to take it on the chin, then we could see that. So now talking about taking it on the chin, one of the reasons why I want you to start a small position in two of the indexes today is because if there is a late rally and you can establish some kind of a base over the next 2 days, which are going to have to be shaky. Then they have to be shaky because nobody knows what the Fed. Well, you can guess by now what the Fed's going to do. They're going to raise, and then they're going to say, but we're going to take a very cautious stance, just data dependent for the next 6 months. And so far, it seems that we might have to extend the delay our next interest rate increase. That's that kind of thing what I'm looking at. So just be careful. You want to get positions, treat them as short-term with tight stops. What's the big deal? You know, you've got to be there to play. So have a great day. Stay tuned for Steve, Dave, and Tom. Check out my opening call. I'll be back tomorrow. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.